What's going on, guys? Today I want to talk about Rocket Mortgage, ticker RKT. I want to talk about why RKT jumped around 70% today. We'll be looking at news related to the stock in terms of social media and fundamental news. We'll be also looking to the technicals and how we can play Rocket Mortgage if we're bullish or bearish on this company. So let's get started. So Rocket Mortgage is a mortgage company which provides online mortgage services to consumers in terms of housing mortgages and other mortgages in general. So this is a type of old banking type stock. It recently IPO'd a couple months ago, I believe, at around $28 to $30 a share, and then dipped back down to 20, and now it's $40 plus. So this isn't a very tech heavy or very growth heavy stocks. So people were very surprised when they saw at the end of the day, Rocket Mortgage was up over 70%. So there are many, many news pieces that have linked together and formed a perfect brew, I would say. So first they announced stellar earnings, which is okay, but doesn't, justify a big run. They also had a special dividend of $1.11 per share, which will be paid out, I believe, mid-March or on March 19th. As long as you are a shareholder before March 5th, then you get that special dividend at March 19th. So, that may fuel the fire as well. But, intrinsically, that's only supposed to provide, $2 to $3 per share, even with the great earnings. So why did it skyrocket, $10 plus? Well, one of the main reasons is that before today, Rocket Mortgage was one of the more shorted companies. It was shorted around 38%, which is actually more than GameStop or AMC currently. I believe it was the second most shorted stock behind Virgin Galactic. So, there was some sort of short squeeze. Throughout the day, we saw, as we see right over here, it was hovering around $30 and could not cross $30. But I'm assuming, the short started covering, and then we saw an explosion, right to the upside. Because, even at 1 o'clock, this was only a $30 share. And then it almost touched 45 at 2 o'clock. So, within 2 hours, it jumped from 30 to 45, which is a 50% increase in, a stock which is pretty big. Rocket Mortgage is $75 billion. It isn't, a small stock, isn't, less than $1 billion stock. So I thought that was kind of crazy on why, it just jumped up all of a sudden. Another reason why we saw Rocket Mortgage jump up was that a lot of people in Wall Street bets was speculating that, Rocket Mortgage can go up. We had a lot of people put a lot of money, many users invest a lot of shares, a lot of on their options, and then they benefited today. However, I don't think that's the main reason. I think we had a decent short squeeze here coupled with great earnings and an undervalued company. So now I want to talk about strategies and how we can play this both on the upside and downside while limiting our risk. So if you are a bull on Rocket Mortgage, or if you are, you want the stock to go up, there are various ways you can play the stock besides, buying the stock and shorting the stock, which I don't recommend, shorting the stock if it is indeed, if it is indeed a GameStop type situation goes past 100, then, you're looking at infinite losses. And then if you buy the stock and it falls 50%, I don't want you to lose 50% of your capital without having that upside risk because it's already up so much. So if you are looking to, maybe take advantage of this opportunity and you think, oh, it'll go on further or it'll stay the same or even, not go down as much, a call debit spread is a great option for you. So what a call debit spread is, I think I explained this before, is when you buy a call which is more expensive, like a $30 strike call, and you sell a cheaper call like a $13.28, and your max profit is the difference between the strikes. So if you look here, we have a March 19th 30 call and we sell a 31 call. So we have to pay $60 for a max profit of $1. So you're risking $60 to make $40 more. So that's a much more attractive valuation than just buying the stock itself. And all it has to do is stay above $31, which it is, by around $8 to $9. So if it stays the same or it goes a little bit down or goes higher, then you make max profit on expiry day. So that's one interesting situation. or you can do something to what I did. I did something called credit spread. So essentially, I bought, you know, I bought a higher strike one and I sold a lower strike one. So this is called a call credit spread. So basically, my max profit is, how much credit I received for these contracts. So I sold the 785s and I bought the 50s. I got $25 per contract, but this is much more risky. If it were to go past $50, I would lose on March 19th. I could potentially lose $75, and then I only had to gain $25. The reason I did this is because, in my belief, there's a 95% chance that this stock will be below $49 by March 19th. I believe even if there's a squeeze, at that time it will be long done. So I got $25 per contract. So this is different because you're receiving credit. So I did this 4 times. So I received $100 and my risk is $300, right? The difference is $400 that I received $100 in premium. So the risk is $300 with $100 of credit, which I can, fully maximize if it goes to zero, if it stays below 49. So there's different ways to play different stuff. You can also do the same thing on the put side. You can do a debit spread on the put side. Maybe if you think, oh, I think I can go lower from here, you can do something like this. It'll be $70, right? So you'll receive, essentially, you're betting that it will stay below $44 and you'll receive $30 back in terms of money, because the max is 100 and you're paying $70 for it. So, these are very high likely plays, but if you miss out on these, it can cost you money. So rather than just buying, thousands and thousands of shares, maybe that strategy is more viable. Personally, I believe Rocket Company is not, GameStop type short squeeze, because GameStop was shorted 100+%, and I believe that's a once in 100-year event. Also, Rocket Companies is a mortgage company, so that you have to take that into effect. That fundamentals are very, very important for finance-related companies. So there you have it, folks. I'm slightly bearish in the short term. However, I do like the company in terms of a long-term perspective. I do believe it's overvalued at its current prices. If it were to go back down below 25, definitely buy some shares for the long term. I hope you enjoyed this video and have a good day.